Hey everybody, DayTraderRockStar here, and you probably know me from DayTradingRadio.com, celebrating our 15th year broadcasting live markets and education and trading. Very happy about that. Next week I want to try to do something real special for you. We've been focused a lot recently on pre-market trading. I've been really dedicated to getting up much earlier because there's so many great opportunities in the market. Especially early in the morning when there's news out there. So we've been really doing well on that. And we have to go where the money is. If you're serious about trading or want trading to be, an income or providing income for you or some kind of monetary benefit, and not just doing this because you like trading, you don't need the money. But if you have to be serious about it, and you have to go where the money is. If the money is easier to be made, or there's liquidity in the market, there's big moves in the market in the pre-market session, you want to get up and take advantage of that. A lot of people don't do that, but we've been doing that over the last couple of weeks, and it's been paying off. So the one thing I've been kind of getting too much involved in stocks, and we've been leaving the futures, just trying to call the setups, taking anything as I see, but I wasn't really focused on them too much, the MES, and I'd review them every night, send out videos, and all of them were working out. So next week is a dedication on the MES. So I'm going to try to do a challenge to myself, trying to trade the whole week from Monday to Friday, the whole week, and using the HPS divergence. Well, actually, I'm going to show you exactly what I'm going to be using. I have the criteria here. We're going to be using live money, and this is basically, I've gone over this many times. We're going to be scalping this, so I'm looking for. Here's some of my my notes, and this is the whole method is actually written down. You could find that in the Trader's Playbook on your dashboard. But it just basically tells you, I had to put everything and organize it, put it all together in a set method with strict rules, and that keeps me focused. It keeps my discipline there. It kind of locks me into taking something. That's very important for this, because this has been tweaked and it's been modified and it works so well. But you have to not stray from it. You have to believe in it. You have to focus on, and you have to know some other parts of the market too. It's just not as easy as turn it on and the money's going to come in. It's going to give you the best opportunities, but you have to read those opportunities. So this is a timing tool. It's going to help you see the opportunities. But at that point, I always say it's very hard to let this thing run on its own. I mean, you could get the script for it to have it run, and that's fine. But I always say monitor it, because the market moves. Trends move, you get bigger moves and directional moves based on the overall trend, and you have to tweak things for that. You might not get your targets, and it might roll over faster, but you're always going to get some type of move off of divergences. And if you could understand that and understand the market around you, you should be able to profit on over 80% of them. All right, and that's a high percentage. I think you could do that. I run the bot usually each evening just to kind of backtrack and see what the bot picked up and see what I picked up and see how it lines up and stuff. And the results are just unbelievable that I question why I'm not just on top of every one. So next week we're going to be focused on every single one. I'm going to be using the methodology that I have on paper here. Everything is laid out for us. I'll go over it fast with you right now. Now I'm going to apply the method and apply the rules. So it might take me out of positions early that I would like to get taken out of them, but also do some live analysis. And I feel like maybe I want to keep it on but I have to have a good reason. I have to have a time frame in the favor of my trade. If I don't want to keep a trade on longer than what my criteria recommends, or at least my my profit zone and my profit calculations on the rotations of the stochastics, and how I take off partial profits into the first rotation. In some cases I will want to hold on to that and maybe let it ride, so to speak, because there's a good strong trend in the market. So the techniques are going to be scalping techniques. What I'm going to be doing is trading the MES. We're going to be using looking for a couple different setups. We're looking for, of course, the divergence setup, the price stochastic divergence, long or short, but we like the longs, especially on pullback channels and stuff. So it's very easy to read a nice pullback channel with a divergence. That's a high probability trade. I love taking them. They're very easy to spot. They tend to appear in bullish trends. Now, if the market continues next week higher, we should see a couple of those. So that's the type of trades. We're also going to be looking at trending markets, and if we have any bull or bear flags. The 2020 technique is outstanding for trending markets. So we covered the choppy markets, we covered the trendy markets. We know what we're looking for. I'm looking for the divergence along on the 1, 3, 5. In this case, because we're going to be scalping, it's going to be the 1, 3, 5. But you always look for divergence on the 60 and the daily. Those are for your longer term swing trades. Also going to look at the 2020 flag, and that's mostly going to be on your 1 minute time frame. I don't really pay attention to on the 5, but I do mention that flags work really good on the 5 and on the daily time frames, but we'll be worried about the 1 minute time frame. Most bull stochastic rotations having the 9, 3, 44 and the 60, 10 all line up. That's also too, and we kind of mix that in with the other stuff. So we see this is great to have multiple stochastic rotation and a divergence into that. That we did have one today. It's a great setup, and if you find those setups, you're in front of them, you prepare yourself for them, you know how to trade them, you can make a lot of money on them. That's where you got to step up. So, and of course, the disclaimer. I always have a disclaimer out there because something can go horribly wrong. Not everything is perfect. I always say that this technique that I teach and trade is the closest thing to the holy grail of trading. But there's never, there's not a holy grail of trading. And the markets could take, a directional move of news. There's so many different things out there, wild cards and cross currents, that nothing's perfect. So, and these are the micros. We're going to be doing the micro contracts. Now you could do the ES contracts, but I just feel it's easier to do the micros in my position while I'm doing the show and stuff. It's more comfortable. It's easier to scale in and scale out, and I'll be using probably be trading the MES, which is $5 per point per contract. So if you have in relationship to the ES, an ES 1 point is $50. So this is 1/10 of an ES contract. That's 1/10 of an ES contract. So you can get 10 MESs would equal 1 ES. You could go up, so you could have multiple contracts, easier to take them off, easier to scale out, easier to add to them, and it's very liquid, and I enjoy it a lot. So that's what we'll be trading, the MES, but you could follow along on any of the other micros. And then we have, and you could, I always recommend some of the futures traders. Ninja Trader does discounted commission. I think Infinity Futures does discounted commissions. Apex Futures. There might be some other services. I'm not 100% sure of all of them. I use Interactive Brokers. It does not give you discounted margins. You're paying thousands of dollars per contract in margin versus the discounted margins, and these you're only paying $50 a contract. So it's a big difference. You could basically it works really well. Now, a couple of videos ago that I sent down, I did a calculation of what I expect to make each day in points, and then you could do the calculation on what they are, what you would make in dollar wise. I always go by points and how many points so my rotations, my automatic exits. If I stick to all that, I could calculate a lot of that out. So on average, and I don't have the sheet in front of me, I have to look it up, and I'm not going to waste your time. But on average, we're looking at our divergences giving us, in this environment, and again, it always changes, but during the open session, during the market days, you can get 5 to 10 points on a 1 minute divergence. And as that time frame goes higher, a 3 minute divergence and a 5 minute divergence, so does those time frames. Instead of holding it 5 to 7 minutes, you're holding it 15 to 25 minutes or 35 minutes, and then you kind of go on, understanding that's the bigger trend. So there's a lot to be had on that. We're going to be just looking for 3 setups, but mostly the divergence setup. I have everything here outlined. I'm just going to go by the outline. I'll break it down. When I do take the trade, I will explain, basically everything about it. So it should be a great week of really focused on the MES. If you haven't tried the MES, it'll be good time to, maybe open up a practice account. I think you can do that on NinjaTrader. NinjaTrader will let you open up a practice account and you could paper trade. So let me see what else. Again, everything I want to show you, the divergences will be taken. This is going to be the important part. How many contracts am I going to take? Typically, I'm only, because I'm in and out and looking at so many different things, and I do see a divergence, I'm usually taking between 1 and 3 contracts. And I'll probably stick to that, and we'll use our 3-star divergence system, meaning that there'll be 3 categories of divergences, and I'll call them out. If it's a 2-star or 3-star divergence, that's when we want to step up and take more contracts. So in this case, the 1-star divergence, you want to take 2 contracts. Now you could adjust this yourself. This could be 20 contracts for someone out there. It doesn't matter. Whatever you're comfortable with, whatever you can afford to trade with. But if you're a beginner, this is a template for a beginner, and that's why I continue to use it, because this is something that you could always scale up. Once you do well this way, and the test is to do this, to do this consistently each day and double your account by using these rules. And once you do that, then you fund your account and do it again. And you can start with $2,000, on the margin account. So we're going to be looking at 2-star divergence and 3-star divergence. Now we have the RockBot. It's set on the 3-minute time frame, and I haven't talked about the 3-minute time frame, and we've kind of switched over to the to using that. It's been very accurate, super accurate, and we're, to see these divergences, there's so much going on here. I know maybe you're listening to this video for the first time. You have no idea what even a stochastic divergence is, or what kind of indicators we're talking about, or anything to this point. There is a learning curve to catch up, so you just have to start. If you're interested in it, just follow up Day Trading Radio. I have a lot of educational videos that take you from the basic ground floor, the great foundation. This is it. This is the guideline right here. So we're going to try to concentrate on 2 and 3-star divergences. And 2 and 3-star divergences really depend on if there's any other indicators lining up by that divergence. Trend line, a reversal candle, and sometimes a time of day or a 5-minute stochastic rotation. These are all, add to the setup. And once we see those, that's when we want to trade a higher amount. 3-star divergence, you might want to trade 5 MESs. And then our exit is already planned out for us. Now, this is where it becomes a little, and again, the original stop is placed on the 2nd stage divergence low. And I'm not going to go into that. That breaks down the whole divergence thing. I'm talking about what the process I'm going to be doing this week, but I'm not going to go through, how to read divergences right now. A trigger is going to be our divergence. Our stop is going to be 1 tick under the divergence low, and our profit is going to be the first rotation on the overbought 9.3 stochastic. I have 14.3 here. It could be 14.3, but in this case, I'm going to change it to 9.3 for me for tomorrow. I'm going to look for that rotation. And the second profit, basically, will wait for that 5-minute rotation, which is actually your 60-10 stochastic rotation. I wrote this out. It almost looks like it was done with a typewriter, and I Xeroxed it. So I did this such a long time ago. It's funny that I still hold true to it, other than I used a 9.3 now. And this should be 60 period stochastic rotation, the reversal candle. The second profit is, like I said, the second profit is on the 60-minute stochastic rotation if you're using the 1-minute chart. That translates to the 5-minute overbought level. And then you take your, you take your second profit profit. And then you can, if you have a third or a trailing contract on, you move your stop up to trail it behind by 8 ticks, 2 points, or set up your platform to maybe use your moving average as a stop, and just follow the price up, or manually just chase it up. At that point, you should already have a break-even stop in, and then just start following it up. In a second, I'm going to show you what we're going to look at. This is just a divergence on the Verizon, and the rules. We're also going to be looking at that sell-side divergence too, and take those, but be very quick on our profits. Sell-side divergences, and then the real big thing this is going to kind of keep us in a. I've been trying to organize myself enough to be able to do a calculator type of trade using our divergence position size calculator, or my spreadsheet here, to tell me how many contracts we want to have and what do we want our loss to be defined as. Now, the problem with defining your loss based on the percentage of your account, which is great, the technique really depends on that reversal candle that comes in on the second stage of a divergence, and sometimes that will be a few points. Maybe that might be 4 or 5 points, and your risk tolerance is only 2 points or 3 points, depending on how much money you have and what your position side is, and and how much of a what risk are you going to take, percentage risk, like a 2.5% risk on each trade. Old school traders say, always say that you should define what your risk is in each trade, and what you willing to lose and get out. That's probably the smartest thing in the world. So this calculator helps you do that. Again, that's also on the site. So you put in how much account size you're starting off with. In this case, it's set to the ES, but I have it set to the MES too. I have a version for the MES. Actually, I'll try to bring it up here in a second. Let's see if I can define that in a second here. Hold on. All right. Well, see, I have it. This is position sizing for the high probability methodology. Trading the MES contract. The margin would be $50 if you're using a discounted broker, and I just said that you could change this. This will do all the calculations for you. You put whatever amount you want to start with. I just have 4,000 as a default, and it calculates exactly, based on your risk. And I say maybe 4%. I put its max risk at 4%. That might be high for some people. Usually it's about 2 to 2.5%, but I don't really even pay attention to that. Pay attention to my candles. But if you wanted just to pay attention to this and have something that's really set in a percentage wise and a real risk management type of way, you have this opportunity to kind of measure everything out, how many contracts you should take and what your risk could be on each trade. But again, that doesn't fit well with reversal candles or candles that we're using as stops if they go past these risk tolerance levels. So if you have a risk, say you're going to hold your max risk to 4%, so you're going to use that 4% as and you can see if you go all the way down, that's if you had 32 contracts and you went down. I think that's 1 point. So cut that in half each time. But that enables you, pretty decent trade on that. But like I said, I'm going to be just you can mess with this. This is just for you to mess with, and it's kind of a cool thing to work with. But we're going to work on just a reversal candle, taking our trade off on the first rotation of the stochastics. You see that first rotation here? Right there. And then we're going to move our stop up to break even. And lots of times you're going to see that market come right back down. But this will be at the point where we're going to decide where our stop is going to be based on what the 60-10 is. And here's your 60-10. You see how this is pointing up? It's just starting to move up. I have a ribbon in there. Typically I don't have a ribbon. But it starts to move up. If you have that sense that this is starting to turn, you don't have to take it off right here, or you could maybe give it a little bit more room and say, all right, I want to keep my original stop in here, and I think this is going to go higher because of the 60-10, and then ride that 60-10 up until it hits an overbought level, and then take profits. So that's two ways that we're going to be dealing with that. We first identify the divergence, get in, take first profit, automatically take first profit at your first rotation. Move your stop up or keep your stop where it is, depending on how the stochastics are, but break them up to break even, and then have a secondary target as the rotation here, and that'll be a secondary target. And once that gets overbought, then you consider taking it off or following it up with a trailing stop and just let it work its way higher. So that's all we're doing. In some cases we might run into some bull flags, and we're going to be taking those also. Here's a nice bear flag. It's a drop down, it's a sideways consolidation, and a breakdown, and we know that because of that rotation up. In this case it was a rotation up on the 40. I haven't looked at I don't have the 60 on here, but we know really good flags when these are sticking above 80 or 90 and the rotation happens on the 9-3 and it holds above the 20. That's a great flag, and we trade these too. But the divergence are going to be key, and the key is to be in front of them and try to let them run as much as we can by analyzing the bigger time frames. I will be having also the Rockbot channel featuring 3 different time frames: the 5-minute, the 3-minute, and the 1-minute on the MES. So it's going to be the first time we're going to be doing 3 different divergence time frames on the Rockbot to help us identify these divergences. I don't want to miss any of them. We'll have the tradeometer working also for a timing on a rotation. You can see the Rockbot here. This was a textbook divergence right there, and it was a good one. That's what I call the hidden divergence. Some people call different type of divergences hidden ones. This is one where the divergence happens. It shoots down here, but you don't see the dip in the stochastics. And over time you'll recognize that. A lot of people are saying, all right, Johnny says that the criteria for divergence is to make a lower low and a higher low. So to make a higher low, you kind of need a pullback and then a move back up. And we're not seeing that. We're not really seeing a pullback. We're not seeing anything higher. It's just a straight line. That's the strongest of the divergences. So that was that, and then it ran up here. Whatever. And we go back here, and this is just running the bot. You can see it picked up one here. And typically, again, this is going to be a good example of just kind of visually showing you when you have a divergence or a setup, you want to, that's usually going to happen with the stochastics oversold. So we're always looking at that 5 to 7 rotation candle. So 1, 2, 3, 4, maybe 5. You start to get overbought. You really, you're going to be visualizing it too. Once you get overbought, the odds of a pullback are there. This is also it's about 2 o'clock in the morning, so it's not much going on in the morning either. So some of these will work great in the overnight hours. It works really good on Bitcoin, but I prefer to let these things just trigger during the day. Here's a pre-market divergence that was really fast, and I had these things really programmed to take fast profits. So it gets to divergence, which is here, and again that was another sneaky divergence, but it can't sneak past the Rockbot. Can't sneak past it. If you're able to see it a little bit faster, you should be able to maybe catch it one candle before, which is, that's what I try to do, identify, because I'm waiting for a confirmation candle before the alert goes off. So, but this is what you're looking for, exactly that. And if you miss it, you got the Rockbot on your side to take care of that. So we're going to have all 3 combinations, everything. And then, and again, one thing I always do and to show you the Rockbot, what I do is I always go after every day, I go back and I go through the charts. And the NinjaTrader has what's called a strategy analyzer on it. And if I want to just, do a fast look.
Order submitted.
Let's see.
Order filled. Order submitted.
That's
Order
a
submitted.
rock bot
Order
on
submitted.
that's a rock bot on the Bitcoin right now. Just talking about the rock bot. That's a rock bot on the Bitcoin right now. Let's bring it over, Johnny. Show them what you get here with the membership about Day Trading Radio. You can actually trade Bitcoin or watch the rock bot trade Bitcoin. And boy, does it work great on Bitcoin. As you can see, look at that divergence long there and that target here, right up here, and then it trailing stop. I mean, it is dynamite. So it's in a trade right now, and that was a big reversal candle just before. All right, so what was I looking at? Let me move this back over here. Now, people want to, they want me to offer the script instead of not with a yearly, but for a monthly. And I wish there was a way for me to do that, but we don't have a billing system that would manage that. So we have to build one out. And once I get it built out, then I would do it. So if that's something that you're interested in, right now I just give out the code to the lifetime members. If you're a lifetime member or buy a lifetime membership and upgrade, I give you the code and you could use it. But I stress that everything I talk about, it's not a turn on your code and go to work and come home. And you can do that and wake up with great profits too. But you can also get run over, and you have to manage it. You have to understand the market and how you want to put your parameters. Everything here is parameters. The market is really volatile and give you big gains. Maybe you want to give it some more room. The great thing about this is keeping this on the. Actually, we're going to go to the Rockbot 5 minute, and I also said that use the 5 minute divergence for everything. Use the 5 minute divergence for everything. The 1 minute has a little different slope to it, same script, but it doesn't take as many trades as the 5 minute. The 5 minute is actually the one that you should be using on your 1 minute time frame on any time. It's a script, and I just have it labeled because I was keeping it separate for each time frame, so it would be organized on your computers that you could say, I put my 5 minute script on the 5, and I could download them both, but for now I could correct that. But for now, just use your 5 minute script. It is exact, it is perfect, and use it on the 3 minute time frame. I'm using the 8. I'm taking profits after 8 ticks. I can move this up to 14. It doesn't really matter because we're moving our break even up after 8, so we're playing with house money. 8 ticks in this environment is like that's a sneeze. It happens in less than a minute. We'll have it down for 5 contracts, and we'll put the instrument as MES, and we're going to use let's use the 5 minute time frame right now because I like the 5 minute time frame, and we're going to go what is this, the last day? I'm just want to look at today's, and I go back. This is what I typically do. Go to that day, and then it'll show me, using this strategy, how many divergences there were and if it was successful or not. So let's see what it is. I'll make sure everything's right. 5 minute MES, back test, Thunderbird 5 minute. All right, we're going to run it. Here we go. All right, drum roll, please. Oh, all right. 193.75. That's trading the MES today. It had 6 trades. This is the 5 minute time frame, so it kind of gives you an idea how many 5 minutes there were according to this. To my calculations. Now I could visually might not see all these, so that's why it's good to have this working for you. This will point out all of them. So six trades, 6 winning trades, 0 losing trades. All right, so undefeated average trade. And again, I have 2 ticks plus the runners. Average trade is $32. There was no losers. And it kind of gives you, and I call it the $20 trade. You remember I talk about, if you walk down the street and you see a $20 bill, you're going to pick it up. Well, I approach trading like that. These type of scalps, they're so easy to get a couple points, and you have a couple contracts. It's easy to get $20 here, $20 here. By the end of the day, you're over $100, and you haven't risked more than $100 on any trade. So that's today. Let's take a look at the 3-minute time frame, which I have it running on the 3-minute. Now, 3 minutes is going to be a little bit more volatile. It's probably going to give us more trades, and maybe some losses if we're going to have more trades. So this had 6 trades for 139, I think. All right, I see some red. This had 21 trades, 17 winning trades, 3 losing trades, and 1 break-even trade. Wow, look at that. $313 profit. Profit factor of 3.18. 80% profitable. Total number of trades 21. And this is on the 3-minute time frame. I told you, when I started noticing the 3-minute, I said everyone switch to the 3-minute. 3 minutes where it's at right now. So real nice. So you could let these things run, but like I said, that is not. It's supposed to, now I could actually go take a look at the chart here, and it'll place those divergences on the chart, kind of show us where they were. Now, would you get in here? You're not going to have a perfect entry. You might have a late entry, and you and all of a sudden it pulls back and it stops you out. All kinds of things can happen. The bot is great because the bot, is instantaneous. It gets in, it gets out. It has no emotion, and no fear, and no, it's not second guessing itself. It's just reacting. That's what's great about that. It catches these big moves too. Looks like there was a stop here. Oh, that might have been yesterday. That might have been yesterday. I'm curious. I never did this before. I mean, it's set at 8 ticks, but let's put it on the 60-minute time frame, and we'll go out for the. This is not. I never thought about trying it on the 60 period. Let's go out to the. Let's go out 2 weeks ago. 18. It takes too long sometimes to back test these. That's why I don't want to just get caught in a loop. And I'm going to keep it a very small profit zone. But we're going to keep that signal bar low. So I'm very curious to see how this is going to play out. 60-minute chart going out for 2 weeks. Let's go to summary and see what shows up here. First time ever doing this. Now we know the 3-minute is optimized. The 1 minute to 5 minute. That's the way we trade it. I'm not going to trade the 60-minute. I was just thinking about it. I'll see. Probably has big loss. I probably could have a big loss because of the huge candles and the news that comes in. Yeah, actually, it has a loss. It's not a big loss. It's not $100. It looks like. It didn't take too many trades. 4 trades. 3 winning trades. 1 losing trade. See, that was the problem. The winning trades were very short-lived because I only had 2-point profits on it. The losing trade was really defined by the candlestick. So if we move these, let's see what we can do with this. How far can we go with this? 8. Let's go to 14, and we'll go to 24. And I'm just curious. I'm just going to go for it. And maybe we just move our trailing stop back to 14. Give it some time. All right. All right. See what it is. So we had a loss of. It's kind of I can't even tell. It looks like $100. But it wasn't many. 4 trades, 3 successful trades. It was a big candle. Gotta give it a little bit more time. Well, that's a little less. It's like down 15. It's not too much, but there's not many trades. 4 trades, 3. So that's the problem. They're not having that many trades. 60-minute time frame. You have to really go out far, and I'm not gonna mess with that. I know when it works. It's going to be on the 3-minute, 1-minute, and 5-minute. If all 3 of those line up and are alerted, so I have the 5-minute running, and then down in this corner I have the 3-minute running, and in this corner I have the 1-minute running. They all show divergences. That's what we call a super signal. There's actually a script for that, but I just run the 1 minute, 5-minute because I really want to see the divergences. I want to see them visually. That's a nice rotation here. You see them all rotating. This was kind of a nice little coil stochastic pullback and a nice bounce. You could see that low, 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 and then you get that breakout, move higher. Boy, I read the markets. So we got that. We're going to be using that, all 3 of those. So that's going to be Monday, Tuesday, Wednesday, Thursday, Friday. Up to 5 contracts are probably, dependent on, how I feel in the market, the aggressiveness of the market. I want to try to be super, super focused. It's going to be a super focused week, focused on the MES. I apologize if that's something that you're not trading, but I really feel like this is one of the best opportunities in the market to make money, and we have to really jump on it. When you have these type of diversions, you can't afford to lose them, and you can't afford not to get in a big way, because that's where your money making opportunities are. All right. Well, I have an idea. Let's try this. We're going to go to the ES. So let's pretend this was an ES trade. We're going to do the same criteria just for today. We do the last 2 days, but I just want to do it today. Could do it yesterday. We'll maybe do it all next week. We'll review these all next week. Each day I'll do a review. So I want to do 3-minute. And we're going to instrument is going to be the ES. Yeah. I want to change that. Hold on. ES. Minute. 5 ES instead of 5 MES. So this is just today. Here we go. If you let that run today, and not to say that you should, but if you took the signals and you stepped up a bit, this is kind of this is a minimum. I know a lot of people trade 20, 100 lots. And you just have to do the calculation. Drum roll, please. Uh-oh, I have the wrong date up. That's going to take too long. Oh, no, it isn't. Well, I went back too far, but that's just as well. Well, maybe I didn't. Thought I did. $1,612 today. 16 winning trades, 5 losing trades. 21 trades, 76. Profit factor of 1.76. Average winning trade 233. Average losing trade, I can't read that. It looks like 400 and something. All right. Well, the other script we're going to be running, and I'll try to run it too on the 1 minute time frame. We'll run let's go bring this to the 1 minute, and then we're going to move and see if we had any alerts on it today. We're going to put the 1 minute 2020 bull flag on here. So I'll remove Well, we'll keep that on there. Let's put on the bull flag. So it's called a Rockbot bull flag. Add that. I'm going to just keep the defaults as it is. It's just a fast profit. I just want to get alerted to it and see if it takes the trade. And this, what is this we're on? We're on the OG. OG, or are we on my account? We're on my account. Let's go to my account. Alright, let's enable it and see what shows up. Boom. Have to remind me to turn these off, or else I'll be taking these trades Sunday morning. Alright, here's the bull flag. Alright, what's the criteria? Underneath the 20, above the 80. In this case, it was actually just above it, heading down, but it did work fine. And it took profits on the way up. Perfect. So that was a good bull flag. I could adjust this too to get a little bit more, because a lot of these bull flags are just missing the 20. It's another thing you need to read into. Like if you could see a pullback here, it's holding the 20, especially reversal. It got close to the 20, and it's holding way up here, and near 90. That's extremely strong. Well, you have to understand that this is coming back and hanging around the 20. Just got oversold. Just broke underneath it a bit. Didn't qualify, but here we had a nice pullback and took profits, and then followed it up with a trailing stop. So that was a nice bull flag. Here's a divergence long. Took profits on that divergence long. It's running both. I'll have these both running here. Another bull flag. Took profits on the first tick. It's great. Great. Close to one here. I would have probably said bull flag right here off of this candle. And that would have been another nice one. And this one back here is close enough to a bull flag. It got real close. You can see it. And then look at that divergence here. That was a sneaky divergence. And that was, followed through. And there's another divergence long all the way up. And this is a couple that seem to have stopped out. I guess these are the two that stopped out on the... Well, that's on the 1 minute. So that's the one. I moved this to the 1 minute. Now, I never tried the 3 minute on the Rockbot flag. Let's try it. It's going to be a little... It's going to be... I don't think it's going to work as good. Divergence is working perfect, but I'm not seeing any bull flags. It's all perfect. Nope, that didn't. Not one. Here's a bull flag. And it took profits too. I'll let it run. It's not. It didn't lose any. That's for sure. Let's go to the. Let's go to the market analyzer. Alright, I got a little dangerous. I put the bull flag on this, on the 1 minute time frame. I put it out for a couple days just to see what shows up here. So we'll see if it did work and how many trades it found. And this is on the 1 minute. This is where it should be. And I'd say it's the number 2 setup. It's a good setup. I think it's easier to call being in the markets all day and being able to see the strength of the market. Alright, $1.25. Woo! 13 trades, 8 winning trades, 4 losing trades, 1 61%. That's not that great. Not as great as I would like it. In this case, let's take a look at today. Plus, it's also only going for a point. Here, today was really good. It was 11 trades, 8 winning trades, 2 losing trades, 1 break even. Not bad. Again, it's only looking for 1 point. 1 point. So that's not bad. Just want to see, but we'll have that. That's something I need to identify on the run. Alright, so that's that. I'll have that running for you. Everything will be up and running. Let me bring that over. Put that in the background right now. Also, those setups that if we get to a 3-star divergence, when we're talking about 3 stars, if you get a 3-star divergence, you could take SPY calls into those. Definitely want to be, for those people out there trading options and scalping options. Great indicator to use is the 5-minute, 3-minute divergence signals. All right, and we're also going to be looking for the candles, so that's all going to add to it. And again, it's going to be very interactive. Hope you can join me. It's going to be Monday through Friday. And, be pretty intensive. I'll be here early. We'll probably start really concentrating on the futures at the open 9:30, and we'll probably go most of the day. I mean, sometimes it's hard for me to pull away from the computer if there's some good setups. So we might go right to, right to 4 o'clock and see what we can do. And we're going to do that each day, and we're going to measure out and see how much we can make trading up to 5 contracts of the MES and taking the HPS setups, and that's the goal. And then from that point on, we just scale up. All right, so week 1, also looking for some, we have a lot of traders in our room, and I know that that's going out to all the different people out there. We do have a 15th anniversary sale going on right now. It goes to Sunday. So you can head over to DayTraderRadio.com and take advantage of that. That's a great deal. I'll put the link in the description. All right, so I think that's I just want to talk more about the divergence and how important it is just to be there. I think I say this for myself as much as I say it for everyone else, because we see the setups, and once you see that divergence and you see these big moves after, you just think about the money that can be made off of these if you've stayed in. Some great quotes out there, some great great movies. Let me see if I can pull one out right now. It comes down to, I'm just looking up, Boiler Room is a great movie. Just looking up some of the old clips of that. This was a good one. Let me see if I can play without getting booted from YouTube.
Notorious B.I.G. said it best. Either you sling and crack rock or you got a wicked jump shot. Nobody wants to work for it anymore. There's no honor in taking that after-school job at Mickey D's. Honor's in the dollar, kid. So I went the white boy way of slinging crack rock. I became a stockbroker.
Great movie if you ever got to see it. It's an awesome movie. But having an opportunity and getting, having an opportunity is just amazing. Being able to see the opportunity each time and being able to act on it is even better. So, I need a team behind me. I need a team of traders. We have, a good couple hundred traders in the room each day trading. I don't know, from options to futures to stocks to everything, spreads and income trades, and there's just so many things. But I want a good team to trade the MES in this style. And I'll be looking for some people and kind of recruiting them in, getting some experts. I want to get someone who's a real good expert on some Fibonacci levels and volume profile, because those are a couple of things that we pay attention to. And when you add divergence to those, it's almost unfair, especially if you have a great volume profile. We use the VWAP all the time, and that's important too. But there's some great levels out there, and there's some great members out there. So I'm going to be reaching out and getting some more input that we could add to these trades, and just be so we have the confidence to really take big positions. And when you take those big positions, that's when you make the big money, and that's what you have to get to. You have to get to that point, right? I have another great quote for you. Remember this?
Hey, listen.
What?
I put it all on the line, that's true. And you know what? It wasn't a bad beat. I wasn't unlucky. I got outplayed that time.
We could do this.
But I know I'm good enough to sit at that table. It's not a fucking pipe dream.
I don't doubt your talent.
I never told anybody this. About 8-9 months ago, I'm at the Taj and it's late, and I see Johnny Chan walk in. And he sits 300, 600. And, the whole place stops when Johnny Chan walks in. Everybody puts an eye on him. I mean, after a little while, you know, there wasn't a crap game going because all the high rollers are over there watching. Some of them are sitting there playing. When they're giving away their money, this guy to say, "Oh, I played with
I'm
a
watching
world
this in a
champion."
second.
And you know what I did?
What?
I sat down.
No, you need 50, 60 grand to play right in that game.
Well, I had 6, but I had to know.
We
What
had the
happened?
divergence. He had the
Played tight for an
divergence.
hour. I folded mostly, and then I made a score.
You see what that is right
White
there?
aces of kings.
He folded mostly, and then he made a story. He saw his opportunity. That's what these divergences are, opportunities in the market that we wait for. We keep unfolding. We don't get too aggressive. We don't take stupid trades. We don't get, impatient and gamble. This is a business, and we wait for our opportunities. And when you see them, then you step up. All right? I mean, I wish I could be that motivational speaker out there that helps you step up and say, either get up there, take that bat off your shoulder, or go sit in the dugout, because that's what we're here. A setup like this, a setup just like this.
White aces of kings.
Rags. I had nothing. But he raised, and I just decided, I don't care about the money. I'm just going to outplay the guy. I'm just going to outplay this guy at this hand. I'll re-raise.
Re-raise. You play right back at him, huh?
Oh, yeah. And he just comes right back over the top of me, trying to bully me like I'm some fucking tourist.
Well, it kind of leaves the trading analogy in the dust there, but you know what it means is take your shot when you have it.
Looks at me again. And he mucked it. I took it down.
But what he says about
Did
it,
you have it?
taking that shot.
Sorry, John. I don't remember. I got up and I walked to the cashier. I sat with the best in the world. And I won.
You fucking move on, Chan, you son of a bitch.
No, sorry for the language. God, we're traders. Yeah, so that's it. That's the scoop going into next week. I hope you get to join me. Take advantage of the sale before Sunday evening if you want to reach out to me or Paul. And after that, we're gonna tighten up things next week. I'm looking forward to it. If you have any questions or anything, get in touch with me. ironaction@yahoo.com. There was a couple people got in touch with me about the Rockbot. I'm actually answering some emails tonight, so hopefully I get to those right now. And we'll see you Sunday evening, and we'll see you soon in the markets. I'll see you.